Hey everyone, welcome back to Corporate Decoder, the place where we unpack the dusty filings of public companies and try to find the funny business, or at least the business of funny looking numbers. Today we are diving deep into GenFlat Holdings Incorporated Form 10, K filing for the fiscal year ending the 30th of June 2025. Now this is your typical growth story, folks. GenFlat is playing in the big leagues of shipping containers, but with a twist, they make collapsible ones. Think of it like a transformer for shipping, saving space and money. But as we LLC, their journey so far is more like a slow roll out of a truck than a smooth ocean voyage. Before we get into the nitty-gritty, if you like getting simple explanations of complex corporate stuff, make sure you subscribe, and hey, we've got a growing community over on Discord. Link in the description, so come join the conversation. First off, GenFlat Holdings Incorporated, formerly Healthcare Business Resources Incorporated, had a bit of a makeover. They swapped their healthcare consulting hats for the world of collapsible marine containers back in October 2023. This filing covers their first full fiscal year operating under this new identity, really showing us where they stand after this major pivot. They kicked off commercial operations in May of 2024, and by the 30th of June 2025, they had a grand total of 3 customers. Yes, 3. They are leasing these collapsible containers, and it is important to note that some of these agreements are even set to start in late 2025. So, as of this report's period end, they were really just getting their feet wet. Speaking of getting their feet wet, let's talk about the numbers for the year ending the 30th of June 2025. GenFlat brought in a whopping $7,894 in revenue. That is right, just under $8,000 compared to 2024. This was an increase of about 51%. Now, I know what you are thinking, that is a lot of growth. But let's put that into perspective. This tiny revenue stream shows they are just beginning to sign their first deals for these innovative containers. It is, however, a start. Now, the flip side to that minimal revenue is their operational costs. For the year ending the 30th of June 2025, GenFlat had a loss from operations of $4,709,006. This is a pretty significant jump from the previous year, loss of $1,232,730. A huge part of this increase comes from general and administrative expenses, which ballooned to $3,306,299 from about $1 million the year before. A big chunk of that increase can be attributed to stock. Base compensation totaling over $2.3 million, likely tied to new advisor agreements. And then there is the inventory. GenFlat had rental inventory, basically their shipping containers, valued at $543,737 at the end of June 2025. This is down quite a bit from over $1.6 million in the prior year. Why the big drop? Well, they also took a massive impairment loss of $1,130,000 on their rental inventory in 2025. This usually means they realized the value of those containers had fallen significantly, perhaps due to market conditions or issues with the containers themselves. This leads into perhaps the most critical point in this entire filing. Their auditors, M1K CPAs PLC, issued a warning. They have expressed substantial doubt about the company's ability to continue as a going concern. This is audit speak for this company might go out of business. They point to the history of negative cash flows, reporting losses, and the expectation of continued losses. Essentially, unless GenFlat can secure more funding and start making some real money, they might not be around for much longer. Looking at their cash flow statements, we see this going concern issue clearly. For the year ending the 30th of June 2025, they used $1,177,670 in operating activities. This is actually an improvement from the $2,438,593 they used in 2024, but it is still a massive outflow of cash just to keep the lights on. And how much cash did they have to cover all this? At the end of June 2025, they had just $49,830 in cash. Meanwhile, their total liabilities were $393,985. This leaves them with a working capital deficit of $123,645. That is a really tight spot for any company, let alone one trying to break into a massive industry. In terms of ownership, things are pretty concentrated. Drew D. Hall, their CEO and CFO, along with Joseph J. Maggio and Garrett R. Hall, who are also in leadership, hold about 26.17% of the company. And then you have significant shareholders like Contained Resources, LLC owning nearly 20% and several others with around 9 to 10% each. It looks like a few key players are holding a lot of the cards here. Speaking of Drew D. Hall, he is the CEO, CFO, and the sole director. He's been in the driver S seat since December 2023. He's got a background as a CPA and has managed various real estate and business ventures for decades. He certainly has experience, but the lack of an independent board of directors is a point of concern in this filing. They do have a code of business conduct and ethics, which is good to see. However, it is important to note that they are currently relying on their CEO to oversee cybersecurity risks, and they have no separate audit, compensation, or nominating committees. This really highlights their emerging growth company status, but it also means there is less independent oversight. This filing also flags a material weakness in their internal controls over financial reporting. Specifically, they don't have written documentation of their internal control policies and procedures, and there are issues with segregating duties. While they are working on fixing this, it is another indicator of the challenges they face as a young company. On the cybersecurity front, GenFlat acknowledges the risks, but states that no cyber threats or incidents have materially affected them to date. They have technical safeguards in place and their CEO is responsible for oversight. But again, the overall structure is very lean. Looking at the security ownership, it is clear that a large chunk of the company is held by a few entities and individuals. Drew Hall, for instance, indirectly controls a significant portion through Few Collapse LLC. This kind of concentrated ownership can mean a lot of influence from a small group. When we dive into related party transactions, we see that Drew Hall and other related parties have been involved in promissory notes and leases with the company. While the notes appear to have been paid off, the ongoing office lease with an entity related to Drew Hall is noted. The filing does state that no member of management has benefited from these transactions, emphasizing transparency. So what is the big picture here? GenFlat Holdings, Inc. is in the very early stages of trying to disrupt the massive shipping container industry with a novel product. Their core idea of collapsible containers is compelling, potentially offering significant cost and environmental benefits. However, the financial reality painted in this report is one of extreme financial precariousness. They have minimal revenue, significant operating losses, and a very serious going concern warning from their auditors. The company is heavily reliant on future financing, and the leadership structure, while experienced in business, lacks the independent oversight typically found in more established public companies. The impairment loss on rental inventory is also a red flag, suggesting that their initial assumptions about the value or deployability of their containers might need a serious rethink. Their strategy to grow through sales and leasing is sound in principle, but the execution is clearly in its infancy, with only 3 customers and a long road ahead to achieve profitability. The risks mentioned in the filing are extensive, covering everything from market acceptance and competition to international trade policies and supply chain disruptions, all of which are amplified by their small size and limited resources. In short, GenFlat is a high-risk, high-reward venture. The collapsible container concept has merit, but the company needs to prove it can scale, generate substantial revenue, and manage its expenses effectively to overcome its current financial hurdles. Until then, investing in GenFlat would be a very speculative play. Alright, that is our breakdown of GenFlat Holdings' latest filing. What is your take on these numbers and what they signal for the company's future? Do you think a collapsible container will revolutionize shipping, or is GenFlat just another startup struggling to find its footing? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and make sure you subscribe for more deep dives into the world of corporate finance. And hey, don't forget to check out our Discord community, linked in the description, where we discuss these filings and much more. Thanks for watching, and we'll see you in the next video.